Hello everyone, welcome back to the 2026 Portfolio Challenge series. This is going to be episode 28, and I'm going to be trying out something new. This is a new dashboard that I created, and it's going to be taking the exact live data from Alpaca, what I'm using for the challenge, and it's going to be implementing it directly into this, which I hope will be better than the PowerPoints. So just a quick overview. As we can see, our main value, or our main portfolio, which is my gut feelings, value picks, high IV, etc., that is 37.6, and that is down 5.8% over the week, right there. The choice value is 30.3% up, and it's down almost 6%. The deep value is basically even, still at 24.5%. And the meme stock is up 1%, which is what I expected, given that I'm doing the poor man's covered calls. And that's still at 95K, which is at negative 4.4%. Now this is pretty cool. Because I extracted everything from the Alpaca, I can actually see everything all at once. And so you can compare here to the S&P 500 and the QQQs, which are at 10% and 13.5% respectively. And you can see how each of my portfolios is doing. And this is by day, so this was end of last week and this is this week. Disclaimer, this is not financial advice. And in today's itinerary, we're going to be going over, like I said, some of the portfolio changes this week, the watch list, and some of the macro news maybe. The watch list news is mostly going to be GameStop and SKHY, and then the macro news is Kimi K3 came out. And there's a lot to talk about there because the market did react to that. I'll be talking more about the portfolios at the end and how I'm probably going to be removing the choice value from the race, and I will be replacing with the deep value in the Alpaca dashboard, mostly because currently the deep value is the only one not in the Alpaca, which makes it hard to implement this into the dashboard. And the choice value is basically, it's in lockstep with my main portfolio, so there's no real reason to use it. So the portfolio changes this week, pretty simple. I sold some ELF to buy SKHY, and that was in the main portfolio. So you can see my ELF is down from 491 to 400, and I used that to buy roughly $11,000 of SKHY, and that's a bit down over the week. And then I added more GameStop to the PMCC, which I will pull up right now, actually. Okay, yeah. So here's the GameStop PMCC tracker. This is the past week. We are now at 154 shares out of 149, and we're basically on pace here. In fact, we're ahead of schedule. This is what I simulated everything out to be with $12 per share, and we got 15 this week. So we're pretty strong here. And obviously, my goal is to beat the median eventually. If I can do that, I'll be at 160K, but even getting up to the 130K would be nice and ideal, I think. That would still put me perfectly in the green. Okay, so in the watch list and macro news, like I said, Kimi K3 pricing, who is pressuring. GameStop with their options exercising. That's actually really interesting. And then SKHY and some of the China news that came out with CXMT and their new IPO and what that means. So Kimi K3, it is not that cheap, but it is cheaper than the 5.6 and Claude Fable 5. And so Kimi K3 lands at roughly 94 cents per task, yeah. And it is almost frontier quality. So it is a 3 trillion. Okay, yeah, it is 2.8 trillion parameters. It is a 2.8 trillion parameters. How much is Claude and Fable 5 parameters? Oh, wow. Okay, so Fable 5 is 6 trillion and OpenAI GPT 5.6. So it's saying here that it's a 405 billion, but that seems a bit too small based on how good it is. So yeah, it is a almost 3 trillion parameter model, which is right up there with Fable and ChatGPT 5.6. And so the market reacted to this. As you can see, all the memory chips, which I'm not sure why memory is being affected by this, and I'll talk about this later, but all the memory chips are basically down pretty big this week. This was, yeah, from Friday of last week. This is SanDisk. It is down 30%. SKHY, well, SKHY is basically even. But Micron, this is from Friday last week. Micron's also down 15%. So I'm not entirely sure why, based on the Kimi K3. And I don't think this is because of, I'll just talk about this later. But yeah, so Kimi K3, it's almost as good as the 5.6 Sol and the Fable 5, and it is better than Opus 4.8 and GPT 5.5. And here is some of the benchmark results. You've probably seen this elsewhere if you're interested in this stuff. So this is Deep SWE, this is Terminal Bench, etc. And you can just take a look around here, pause if you need it. And you can see that Kimi K3 is right up there with the two really elite closed models out there, which is Fable 5 and 5.6 Sol right now. And to be honest, Fable 5, I've been using it for a while, and it is better than Opus, and it is better than 5.6 Sol, I think significantly for what I need. Yeah, so there's Kimi K3, and you can see that this open source, open parameter model and open weight model is better in most aspects, or just as well. Yeah, here's some of the visual agents and some of the other ones. And you can see it's always in the top 3 no matter what. And this is other people doing it, not just Kimi K3. And I have not used it, but I've heard a lot of good things about it. So there you go, it is cheaper and it is almost as good. And so, oh yeah, I did want to talk about this. It does remind me a lot of the DeepSeek about a year ago. And you can see here, I think it was it beginning of like April maybe of 25, and everything just collapsed. This is Micron specifically I'm looking at, but I remember NVIDIA and AMD, they got hit by this pretty hard. This is April of 25. And they all dropped. Yeah, NVIDIA dropped to nearly $90, under $90 a share, which was insane. And this is all because of DeepSeek back then. And so what DeepSeek did was it basically told everyone here, look, you can do everything cheaper than OpenAI and Anthropic. And for some reason, the market took that out on memory and chip stocks because they thought it would be less memory intensive. And it's not. If anything, it's going to be pulling up usage because now more people and more companies can use it because it's cheaper. So I think the memory companies are going to be fine. And I think the chip companies such as NVIDIA, TSM are going to be fine as well. Obviously, they're training this using NVIDIA memory. Even if China does not have direct access to NVIDIA stuff, it is going to be using it via cloud, via other countries. So I think mainly this will put pressure on Anthropic and OpenAI because everybody was making a huge deal, and even the government intervened and was saying that Fable is too strong and too powerful. And then a week later, literally a week later, there's an open source model that's just as good at everything. So we'll see where this goes, but I'm not super bullish right now on Anthropic and OpenAI if that's how open source is looking, especially not their pricing. I'm going to say their models are still better, and they have Codex and Claude Code, which are phenomenal, but they're going to have to cheapen up a bit. So GameStop. This is really interesting. So GameStop, I talked about this a few weeks ago, and so they've been building up a ton of options, ton of calls, ton of cash secured puts, things like that. And we never really knew the base cost of it. And so they officially exercised it with an average price of $101.26, and currently eBay, I believe, is at 100 and almost 20 or 112. It was 120 a few days ago. Yeah, so 101.26, which is significantly cheaper than what it is, for a total cost to GameStop of $3.94 billion. And with the current price of eBay, it is now worth almost $5 billion, which means half of the current GameStop market cap, which is funny to think about. GameStop's current market cap is $9.82 billion, and it owns 10% of eBay, or 9.8% of eBay. And eBay being $50 billion, that puts it almost exactly at 50%. So that is funny, that is interesting, and it does show me, I think, that GameStop is serious in pursuing eBay. I'm not entirely sure what this means regarding 10%. They did have to file a 13D to do it, and that 13D, you can find it. We'll see. I'm not entirely sure, like I said, what this means regarding the eBay acquisition, how much eBay they need to actually put a member of their board on it, or call a vote for the board. But I am very bullish, I think, regarding GameStop. In general, I like Ryan Cohen, and I think he will take over eBay eventually. It's just a matter of time. SK Hynix. So CXMT IPO'd in China. Now, what is CXMT? So CXMT, it IPO'd in China for $8.6 billion. That's, to be honest, that's less big than GameStop that we just talked about. And it's making huge waves about how China now has its own memory creator. Now, CXMT is mostly DRAM, which is the commodity part of it. It is ramping, but it is still mostly DRAM. And they are building HBM, but they are building HBM3. Now, both SK Hynix and Micron, which are the two that got hit theoretically by this, they're both HBM4, which is a whole generation better and newer, and it takes a long time to ramp up to build this stuff. So I am not worried at all about China having its own competitor, because they're still going to be needing the memory that SK Hynix and Micron are building with, and that does not change anything, in my opinion, regarding the long-term view of SK Hynix or Micron. And also, I did want to take a look at this. Check this out. So Micron, it has a market cap of 95.8 billion, and it's got a revenue of 90 billion currently. But if you go for next year's revenue, it's going to be making almost 250 billion in revenue, and this is obviously going to go up more than likely because they've been destroying their estimates. But we're talking about almost a quarter of their market cap in revenue, and they've got, I believe it's like a 90% gross margin. So currently it's at 72%, but that is going to keep growing more than likely. It's been growing. So actually, yeah, I remembered it was more. 35 divided by 41. Yeah, it's at 85% already, and it's gonna keep growing. So they're gonna be at almost 90% margin, and they're gonna be making 250 billion. So I am not sure how this market cap is under 1 trillion, and in fact, it should probably be closer to 2-3 trillion. And that does show up in the forward PE right here that it is undervalued. And likewise, SK Hynix, it's got very similar numbers. I believe maybe it's a bit cheaper technically, but it's very similar, and I am happy that I own both of them right now. Okay, so let's go over each of these right now. So this is the main portfolio, as you can see here. It is at 37.6%. We are down almost 6% over the week. And so this is based on the QQQ, and we can do this from SPY to QQQ. This is pretty cool. So I did measure alpha and beta, and I've got an explanation here where alpha is, it's the y-axis on the daily slope, and beta is basically how correlated we are with the market, where the larger the beta, for instance, 2 beta would be every 1% move of the market, this moves 2%, right? It is currently at plus 0.138 alpha compared to the Qs right now per day, and compared to the S&P 500, it is at 0.131% per day with a significantly higher beta. Now, what does this mean overall? It's that the beta basically means that the weekly change is going to be significantly more. So I'm going to have way bigger swings than the S&P 500 and the QQQ, where the QQQ was at 4.2% last week, and S&P 500 negative 1.5, and we're at almost negative 6. So it is worse, but with a Sharp of 1.68 and a Sortino of 2.54, risk adjusted, we are better. Now the alpha, am I a 41% alpha better than the SPY and the QQQ? No, and this is obviously annualized. I don't think I'm that good. I think I'm okay. I'm not that good. 41% alpha means that I'd be making 60% per year. I can tell you that's not true. So that's just an interesting way to look at it, and I will be having weekly updates for this, which is awesome. Now this is also pretty cool because now I can hover and see everything. These are my changes this week. As you can see, I sold ELF, bought SK Hynix, and Robinhood options, so I bought them back, made some money on it. Now Robinhood, I did not sell more because Robinhood did drop to like 97, I believe, 99, okay. And I like to sell them at like 115. So I'll keep it there. I'll keep holding Robinhood. I am bullish on them in the long term. So this is my historical winners and losers, and here you can see this is gain from my options, the lined ones here, this one. So I do mostly have gain, and the only one that's losing right now is Rivian at the beginning of the year. But most of these are gains from the options. And you can see here that, how is ELF losing? Because ELF at the beginning of the year, I lost quite a bit of money on that one. That's interesting. So yeah, you can see my biggest gainers this year are Micron and SanDisk and LUV. That was a fantastic purchase. I'm very happy with that. And of course, TSM and the other NASDAQ companies, which is why I'm so correlated with the NASDAQ, I think. And obviously my biggest losers, they're all here. Thankfully, there are not too many of them. The meme stock, so this one, I just bought some more GameStop. I sold some more GameStop as well, but I got some more cash, and my historical winners and losers, Robinhood is all options gain, and I lost a lot on the stock, and GameStop is all gain right now, but I am still down. So I am at minus 4.4% right now. My Sharp is not good, obviously, and my beta, I have no clue how it's so high. Oh, because I was holding Robinhood options for a while, and obviously my alpha is not going to be good, especially compared to the S&P 500. And you can see this is basically how it's performing. So when it dropped, I dropped big, and when it rose, I rose quick, and then I dropped. This is when I sold again to change to Robinhood, from Robinhood to GameStop, and then I've just been rising since then. And like I said in my simulation, I fully expect to be at like 130 at the end of the year. So my choice value, this is very similar to the main one, and we can go home for the main one. And you can see that they're basically in lockstep. So I will be removing the choice value. It's basically got the exact same things as the main one. Basically the same Sharp, basically the same Sortini, same beta. Alpha is less good, but that doesn't really matter right now. So I see no reason to keep the choice value right now. And yeah, you can even see most of my gains and losses are basically the same with both of them. Am I not down on Celsius here? This is really sketchy. Oh, I'm up on Celsius. Okay, that's cool. Yeah, so I will be removing the choice value, and then from here on out, this will be just the main meme stock and deep value. Now for the deep value, because it's not on an alpaca, I do not have daily data, so all of this is roughly equal. So the Sharp, that is not true at all. The Sortini, obviously not true because I don't have daily data. So obviously my risk is going to be lower because I'm not moving as much. The beta isn't true at all. And yeah, the deep value of the total return is 24.9. I am 15 points better than the SPY, and I'm 11 points better than the QQQs. And this is again, mostly due to Micron and SanDisk, but the other things are also doing okay. There's not too much to talk about here. There will be more data in probably like 2-3 months. And yeah, you can see it doesn't even do the alpha and beta because that's just irrelevant right now. But yeah, the deep value, it's mostly uncorrelated with the rest of my portfolio because it's just the deep value stocks. And you can see that a lot of them are good. They're mostly positive. So even if I didn't have this huge Micron and this huge SanDisk sell or buy, I'd still be pretty profitable here. And still probably better than the S&P 500 and the QQQ. Okay, I believe that is it so far. Yeah, here I just I wrote myself some notes here for the slides that I will be changing to the deep value. Oh, I did want to do the risk over time. So this is just, let's go 2026 main. This is the three of them. And so the top is beta, which like I said, again, is the slope. And this is the alpha, annualized, of course. So at the beginning, it's going to have huge swings because it's annualized, and then it's going to slowly calm down. And you can see that it is growing slightly as time goes by. And I'm not sure that's the correct way to look at it because this alpha should not just follow how your portfolio is doing. So I'll need to take a deeper look at this. But you can see that the beta has mostly evened out for all of them. And the meme stock, I believe that's going to keep going down, but they're all around the 2.0 beta, which it's not a bad thing, especially when the market's doing good. But you can see here that when the market's doing bad, it's doing really bad for me. And this is compared to the SPY. Let me change that to the Qs. And you can see I am just about 2 times as bad as the Q at its lowest point. But I do think that for the rest of the year, I'll be continuing to go better, higher, quicker than the rest of the market. So I think that's it for this week. Thank you guys for listening. Good luck this week. I'll see you guys next week. Bye-bye.